Welcome back to the Malaysia Money Matters show. It's the 17th June 25.
Good to be back.
Today, we're diving into the key financial and economic news from yesterday, June 16th. We'll cover Malaysian companies, the economy here at home, and what's happening internationally.
Yep, cutting through the noise, figuring out the impact for you.
Exactly. Okay, let's kick off with Malaysian company news. First up, CIMB. Big leadership change there.
That's right. Datuk Syed Zaid Albar, formerly head of the Securities Commission, he's new group chairman, takes effect July 20.
Interesting. Someone with a strong regulatory background. What's the impact here?
Well, it signals, bringing in deep market and regulatory insight. It's likely aimed at guiding their strategic plan. The stock did dip a tiny bit yesterday, though.
Markets can be funny like that, even with experienced appointments. Okay, next, Deleum. Looks like an acquisition.
Yeah, they're buying oilfield service assets in Thailand from MPC Future. It's about RM60 million cash and shares involved.
So expanding regionally, into Thailand specifically.
Precisely. It boosts their offerings there, positions them to be a more significant player in that Thai market. Shares reacted positively yesterday, so investors seem to like the move.
Okay, now Qualcomm, the jeweler. Record revenue, but flat profit. How does that work?
It's a classic cost story, really. Gold prices were high, right? So sales jumped. Big demand for gold as a safe haven.
Right, makes sense.
But operating costs and income tax also went up significantly. So those increases basically canceled out the revenue gain on the bottom line. Shows costs really matter.
Gotcha. Okay, Petronas now. They're looking at carbon capture and storage, CCS, as a future revenue source.
Yeah, it's a strategic shift. They're exploring how to commercialize decarbonization. This could potentially unlock value from gas fields with high CO2 content.
And maybe offer services regionally?
That seems to be the idea. Positioning Malaysia as a potential hub for CCS still needs huge investment, though.
Of course. Big news for Solarvest, too. Looks like they landed a deal in Brunei.
A major one. Their joint venture secured a 25-year deal. They'll build and operate Brunei's largest solar plant.
Wow, that's significant. Expands their regional footprint quite a bit.
Absolutely, and it helps Brunei with its renewable targets. It's kind of like exporting Malaysian solar expertise.
Good point. And Total Energies is doubling down on Malaysia.
Seems like it. They're expanding their upstream presence, buying interests in several offshore blocks from Petronas, aiming to double their overall stake here.
So Malaysia remains a key anchor for them in the region.
Definitely. Especially for low-cost, low-emission gas production and supplying LNG to Asia. It's a vote of confidence.
All right, last one on companies. West Ports and the port tariff hike.
Yeah, they got approval for a staggered tariff increase at Port Klang. It's going to be about 30% cumulative by 2027.
That sounds like a significant positive for their revenue.
It is. It'll help fund their expansion plans. So good news for West Ports, though you always have those geopolitical risks hanging over shipping routes.
True. Okay, let's shift to Malaysian economic and policy news. The Halal Industry Master Plan seems to be hitting its stride.
The results from the first phase look encouraging, yeah. Added about RM149 billion to GDP, RM61.8 billion in exports.
Those are substantial numbers.
They are. Shows progress towards being a global halal hub. They're aiming for RM25 billion in new investments by 2030 with updated plans.
And Malaysia got some international recognition on sustainability reporting.
Yes, from the IFRS Foundation. For aligning with the global ISSB standards, we're actually the only ASEAN jurisdiction recognized for adopting them with a phased approach.
That enhances our global standing in ESG, right?
Yeah.
Helps companies comply.
Exactly. Gives them the tools, makes us look good internationally.
Now, the expanded SST, analysts are saying it won't crash spending, but it adds pressure, especially on rentals.
Yeah, that new tax on commercial rentals is a pinch point for businesses. It's another cost layer. Combine that with minimum wage, utility tariffs.
It adds up.
It does. So while the overall economy might be okay, these costs raise concerns about business sustainability and maybe getting passed on to consumers.
Speaking of taxes, there's a new 5% sales tax on palm kernel oil coming July 1st.
Right. That could increase input costs for our oleochemical players, the downstream guys. Might affect competitiveness.
Although palm oil prices themselves have jumped recently.
They have, yeah. Above RM4000, partly tracking higher soil and crude oil, driven by things like U.S. biofuel policy talk and Middle East tensions. It all connects.
It really does. Okay, broader economy. Maybank IEB sees growth slowing a bit from Q2. global uncertainties.
That's their forecast. External headwinds, like U.S. trade policy shifts, are a factor. But importantly, domestic demand is expected to hold up pretty well.
Supported by government help and the job market.
Exactly. So domestic strength might cushion some of that global drag.
And on Bursa Malaysia, local institutions are buying while foreigners and retailers are selling.
That was the trend last week, yes. Shows different sentiments. Local funds providing support, especially in financials, healthcare, property, while others were cautious. Domestic support is key right now.
Right. And a huge investment announced by Tenaga Nasional.
Massive one. RM43 billion committed by TNB to upgrade the national grid. Announced by the PM.
Wow. What's the goal there?
Enhance resilience, support more renewable energy integration like solar, and just meet growing demand. It's absolutely crucial for a clean energy transition.
Okay, let's jump to the international and political side. Petronas' CEO highlighted a massive investment need for Asia-Pacific's energy transition.
US $90 trillion by 2050. That figure is staggering. It just underscores the scale of the challenge meeting net zero goals while the region keeps growing. Needs huge, urgent investment beyond fossil fuels.
And the Israel-Iran conflict is casting a shadow, affecting markets.
Definitely. It overshadowed energy industry talks and caused volatility. Oil and European gas prices went up on concerns about potential supply disruptions, like around the Strait of Hormuz.
A reminder of how fragile things are.
Very much so. Even if major infrastructure isn't hit directly, that risk premium gets priced in fast.
And we saw that impact Bursa energy stocks yesterday. They surged.
They did. That geopolitical risk provided a temporary boost. Analysts are revising outlooks, but whether this rally lasts depends entirely on the conflict and what OPEC Plus does.
Speaking of OPEC, what's their latest outlook?
They're expecting the global economy to stay fairly resilient in the second half of 2025. And they trimmed the forecast slightly for supply growth from outside the OPEC Plus group in 2026.
So relatively optimistic, maybe supporting market balance for them.
That seems to be the view, yes. Could help keep things stable from their perspective.
We touched on palm oil prices, jumping cracking soy and crude.
Right. Driven by things like potential U.S. biofuel mandates boosting edible oil demand, plus those higher crude prices making biofuels more attractive. Good for producers.
Shifting to bond markets, investors are shying away from long-term U.S. bonds. Why is that?
Fewer expectations now for really aggressive Fed rate cuts. Plus, growing worries about the U.S. fiscal deficit, the government debt situation.
So changing views on U.S. policy and finances are causing ripples.
Yeah, contributing to volatility, affecting the yield curve, shows unease about the long-term U.S. picture.
And volatility in Japan's bond market is spilling over globally now.
It is. Since the Bank of Japan loosened its grip on yield control, moves in Japan's huge market are affecting U.S. treasuries, European bonds. Everything's connected. Increases volatility worldwide.
Finally, a warning from RBC Capital Markets about U.S. stocks. Potential drop if inflation picks up again.
Yeah, they're flagging the risk. After a strong run, markets might be vulnerable. If geopolitical tensions push oil prices higher and reignite inflation, that could hit the economic outlook and stock valuations hard.
So wrapping up,
Yeah.
yesterday really showed how interconnected everything is. Malaysian companies making strategic moves, domestic policy shifts, all against this backdrop of global energy transitions and tense geopolitics impacting everything from oil to bonds.
Absolutely. You really can't look at any of these pieces in isolation anymore. It's all part of one big, complex picture that you need to navigate.
Well said. That brings us to the end of this deep dive.
Remember to keep tracking these developments.
And please consider asking the listeners to subscribe to the Malaysia Money Matters podcast. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.